All right, we're looking at the average costing method for inventory valuation. Remember, inventory valuation is we're tracking the movement of the goods within our company. So whenever you're doing questions dealing with inventory valuation, you need to make a table like this. This is called a stores ledger. All right, it's a 3-column table which has purchases, sales, and the balance. So as I said, the only transactions that are going on here is just purchasing the goods and selling the goods. All right, so those are the 3 main columns here. Then the date here. So I've got some transactions here, and we have to use the average costing method to value our inventory. All right, so first things first, you always need to put in the opening inventory. These are the goods you start with at the beginning of the year. So in this case, our opening inventory is 50 units of this good. So you come on the balance section of the stores ledger. The quantity, 50 units. The price, 2 kwacha per unit. The value, 100 kwacha. So this is our opening inventory. So now we're going to look at the transactions that went on in this month, and then we record them. So on the 1st of this month, we purchased 20 units at 2 kwacha per unit. All right, so on the date, you put the first, even for opening inventory, you put a date here, the first. 1st of January 2024. So since we bought goods, so we're going to focus on our purchases column. Purchased 20 units of this good. Price 2 kwacha per unit. The value 40 kwacha. So now we transfer this information to the balance side, and this is where we'll see how the average costing method works. All right, so originally we had 50 units, each at 2 kwacha per unit, the value 100 kwacha. We brought in 20 more units. The price is still 2 kwacha per unit. The value is 40 kwacha. So here we're going to get the average cost of our inventory. So what we're going to need to do is we add 50 plus 20. In total, we have 70 goods in our business. What is the total value? 100 plus 40, that is 140. So to get the average cost, it's the total value of the inventory divided by the quantity of the inventory. Okay, so the total value is 140, and the quantity is 70 units. So 70 divided by 140, that is 2 kwacha. All right, then we need to go to the next transaction. On the 2nd, we purchased 30 units at 2 kwacha per unit. So we're going to record here on the 2nd of January. We purchased 30 units at 2 kwacha per unit. Total value 60. All right. Then come to our balance section. We have already got 70 units which are valued at 2 kwacha each. Their total value is 140 kwacha. We've brought in now 30 more units, each valued at 2 kwacha. The total value is 60. So we total up the total number of goods we have in our shop, 70 plus 30, that is 100 units. The total value of the goods, 140 plus 60, that is 200. So to get the average cost of our inventory, we're just going to say the total value, which is 200, divided by the quantity, which is 100 units, which is 2 kwacha. And since both of these are already 2 kwacha, so already you expect to get the same answer. Yes. Before I move further, any questions? Okay, we go to the next transaction where we have a sale. We've sold 20 units at 4 kwacha each. That's on the 3rd. Yes. Yes, you are correct. Could you just say that again? I couldn't hear what you were saying. Just ask your question again. I couldn't get you clearly. Or if someone got him clearly, just repeat the question. It was breaking on my end. Or Mr. Burton, you can type the question so that I see. You can type the question. Yes, so on the 3rd of January, we sold 20 units at 4 kwacha per unit. So we come on sales, column for sales, we sold 20 units at 4 kwacha per unit. Total value is 80 kwacha. So here, all we need to do is we just need to deduct these 20 units from these 100 units that we had earlier on. So 100 minus 20 remain with 80 units, each valued at 2 kwacha per unit, with a total value of 160 kwacha. If we go to the next transaction on the 4th, we sold 15 units at 4 kwacha per unit. 15 times 4, that is 60 kwacha. That's how much we earned. So these 15 units, we're going to deduct them from the 80 units that we had. So 80 minus 15, that should be 65. So remaining 65 units valued at 2 kwacha per unit. 65 times 2, 130 kwacha. That is the value of the goods we have. Any questions? Mr. Burton, have you typed your question down? Who has been kicked out? Yes, any questions? Okay, so we can also we can also find the gross profit for this company. Okay, let's just say these are the only 4 transactions that happened in the month, and want to find what is the gross profit of the month. All right, so remember the trading account which we did in financial accounting. So we're going to have to make a trading account. So yes, the purpose of the trading account to see what gross profit you have made. All right, so this is the formula: gross profit equals sales revenue minus the cost of goods sold. So the first element in our trading account will be our sales. We get our sales revenue. It's a trading account here. All right, so we total how much we made in sales. So we come to the value section here. 80 plus 60, that is 140. So we made 140 kwacha in revenue. All right. Then after you get your sales, the next thing you need to get is the cost of goods sold. COGS. And in order to get the cost of goods sold, cost of goods sold, it's the total cost of goods available for sale minus the closing inventory. All right, that's how we get our cost of goods sold. And in order to get the total cost of goods available for sale, it's the opening inventory plus purchases. Now, this is just a simplified version, all right, because there are a lot of elements which come in the trading account, but for now, you need to remember these. So in order to get our total cost of goods available for sale, first we need to get our opening inventory. So the value of our opening inventory is 100 kwacha. Let me highlight these in red so the numbers are not confusing. Okay, the opening inventory, we need to add it with purchases. So the total value of purchases, 40 plus 60, that is 100. So we say 100. So to get the total cost of goods available for sale, TGAS, we add 100 plus 100, that gives us 200. All right. Once you've got the total cost of goods available for sale, then you can deduct the closing inventory so that we can get the cost of goods sold. Less closing inventory. So the closing inventory is these 65 units at 2 kwacha per unit, and the value is 130 kwacha per unit. So we get the value 130 kwacha. So to get the cost of goods sold, COGS, put this in brackets. Let's get the cost of goods sold. We subtract total cost of goods available for sale, 200 kwacha, minus the closing inventory, 130 kwacha. We're going to get 70 kwacha. So this is the cost of the goods sold. And then to get the gross profit, you're just going to say 140 sales minus cost of goods sold, 70. So 140 minus 70, our profit is 70 kwacha. And that is the gross profit for this firm.